Capital losses. Now, individual taxpayers may experience capital losses. Hopefully, you don't. Hopefully, you see nothing but gains and prosperity in your future. But that's not the way the world works. Sometimes we will lose some money. So, you buy stock, it goes down, you sell it, you lose money. That's not good, but it does happen. Now, this could happen from the sale or disposition of capital assets, such as stocks, bonds, and real estate. Now, if the amount of capital losses exceeds the amount of capital gains, we are going to see a net capital loss. This is what we saw in our first slide, dealing with that $3,000 amount, which, reminder, please memorize that. Now, the IRS, the benevolent IRS, allows taxpayers to use this net capital loss to offset other types of income, such as wages, salaries, or interest income, but that is capped at that $3,000 amount. Remember that. Let's talk more about our capital losses. Wow, the amount that you see, the $3,000 amount, yeah, oh my gosh, it's almost as if you really need to memorize that. Yeah, it really is important. Please memorize that. Now, some other key points here. There's a limitation on the deduction. Individual taxpayers may deduct up to $3,000 of net long-term or short-term capital loss against gross income. So, as we said in our first slide, if you've got stupid amounts of losses and gains, those net against each other, but any net losses, you can only max out at $3,000 per year and deduct that against, let's say, your salaries and wages. This limit applies to both single and married filing jointly taxpayers. The IRS views you as kind of one entity for that purpose. So it's only $3,000. And for example, there are going to be other things where you get the double benefit for being married. Just in this case, it is $3,000 if you're married filing jointly. We saw it earlier that if you're married filing separately, it's $1,500 per person. Now, it is going to be limited to taxable income. The deduction here is limited to your taxable income. So let's say you only worked and made $3,000 for the year, or let's say you made $2,000. You can't get your income below zero and take a loss. Excess losses may be carried forward to future years. These are all different caveats and criteria. I know this is incredibly complex. There's a lot of different rules. And it's up to you to memorize all these rules and be able to apply them. And I know it's the nature of the exam. It's what we signed up for. So if I only have $2,000 of wages for the year, I didn't work too hard this year, $2,000, and I've got net losses of $3,000, I can only take $2,000, even though the maximum amount is $3,000, and I carry forward that extra $1,000 to future years. Now, we can carry forward this indefinitely. So let's say there's just an absolutely brutal year where we've got net capital losses of, let's say, like $150,000. It's a lot of losses. We can keep carrying forward $3,000, $3,000, $3,000. Or what are we going to worry about once the person passes away? Because maybe that just goes on all the way until they pass away. Don't worry about that. That's not even within our realm of possibilities, what we have to think about for the exam. This is just something to note. Yep, this will be carried forward indefinitely. It's not like you're capped out. It's not like they expire at a certain point. You got to keep track of that. Documentation, paperwork, super important for taxes. Now, personal bad debt treated as short-term capital loss. If you've got a personal loan that goes unpaid, the unpaid portion may be treated as a short-term capital loss. This is also subject to the $3,000 annual limitation on capital loss deductions. We'll see this pop up in a few other places as well, including the worthless stock treated as capital loss. So if you've got a personal loan to someone, it goes unpaid, they declare, I can't pay you, I'm not going to pay you, they go bankrupt, something like that. That's what we're talking about here. And then worthless stock. So whether it's stock on the open market, you buy into a company, it goes under, or it's maybe private or something like that, goes under. That is also going to be capital loss. This is a deductible short-term capital loss in the year that the stock becomes worthless. Just points to keep in mind as you practice questions. Remember to practice multiple choice questions in Sims, particularly Sims, because I know you. I know you're probably going to want to avoid Sims because if you're like me and you're like everyone else I've worked with, Sims are intimidating. A lot more than just answering 1 out of 4 for a multiple choice. So as a reminder, make sure you're practicing your Sims, having a good time with it. We're running through examples here, seeing how this works practically. First, let's talk about the limitation on deduction. So let's say that your individual taxpayer here has a $10,000 of long-term capital gains and $15,000 in short-term capital losses for the year. We're going to net these together regardless of long-term, short-term. We're netting them together to see what our net capital loss will be. Now, we are going to have $5,000 of net capital losses. However, we know that we can only deduct $3,000 against your gross income. So we've got, in this year, $5,000. We've got $3,000 we can deduct, which leaves $5,000 minus $3,000, $2,000 going forward to future years. We can carry forward indefinitely to use next year, the year after, whenever the conditions are met. Now, building on this initial point, we are going to see that it is limited to taxable income. So let's say that this individual only has $1,000 of taxable income for the year. In this case, your deduction would be limited to $1,000. So we normally, in this case, could have taken $3,000, but we're adding in the additional factor that we only had $1,000 of taxable income, meaning of the $3,000, we could only take $1,000, meaning the remaining $2,000, well, presumably $4,000, right? Because we had the $2,000 that we couldn't ever take at all because it's 5,000 minus 3,000. But then the additional 2,000 of the 3,000 that we couldn't take, we're going to carry that forward. May have been a little confusing there. So, but generally speaking, right, this is going to be the total loss of 5,000 minus 1,000 that's used this year to bring your taxable income down to zero. That's going to leave $4,000 carried forward into the future. Just wanted to separate it into those kind of two buckets. More examples. Let's talk about carrying forward this indefinitely. Not that this really needs an example, but hey, it just never hurts to see more examples. In the same taxpayer in point one, they've got $5,000 of long-term capital gains and $2,000 of short-term capital losses, which means that we've got a net capital loss of $15,000. In this case, just like in any case, it's going to be $3,000 that we can deduct, unless we've got that lower income. So we can deduct $3,000 against your gross income, leaving us with the remaining net capital loss of $12,000. Now, this remaining net capital loss can be carried forward indefinitely to future tax years and used to offset future capital gains and up to $3,000 of ordinary income each year. Now, it is going to be first used for capital gains because let's say next year we've got a full $12,000 of capital gains. We're going to say $12,000 of carry forward, going to take out the $12,000 of capital gains, leaving nothing left that we can deduct against ordinary income. All right, we're feeling good. We're seeing examples of what we're talking about. Next up, we've got the personal bad debt treated as short-term capital loss. Let's say that we, as an individual taxpayer, we lent, we're being good here. We're trying to be a good friend. We lend them $5,000. However, the friend, not being a good friend themselves, or they're just going through hard times, not judging anyone, they defaulted on the loan, and the taxpayer was unable to recover the amount. The unpaid portion of the loan may be treated as a short-term capital loss. Sounds good. If the taxpayer has no other capital gains or losses for the year, they can deduct up to $3,000 of this in your current year against the gross income, and then the remaining $2,000 of this $5,000 can be carried forward to future tax years. And then next up, we've got our worthless stock treated as capital loss. Now assume that an individual taxpayer purchased $10,000 worth of stock, and it became worthless in a given tax year, whether it's this year or a future year, doesn't matter. The taxpayer may treat the loss as a short-term capital loss and deduct up to $3,000 of that loss against their gross income. If the taxpayer has no other capital gains or losses for the year, the remaining $7,000 of the capital loss can be carried forward to future tax years. Now just keep in mind, it's going to take practice. All these things, they seem simple enough in practice with our examples here, but you're going to need to see more and more examples. And the more you do, the more caveats, the more tricks, exceptions. I'm covering them all here, but just practical examples and questions, that's where you really start to test yourself. So never hesitate, do more multiple choice questions, do more sims. That is how you will find success.
Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.